You're also looking at retail figures, and these tell a story of, well, please don't take us back to lockdown.
Yeah, please don't take us to lockdown. That's exactly the way to look at it, Tom. We knew that already also because we got a revised figure of January, which was the back end of the lockdowns that were somewhat going on in Sydney, and they were revised down from 0.5 to zero point 0.3. But more importantly, we actually saw a 1.1% decline in retail sales in February because we had a 5-day lockdown over in Western Australia and that 5-day lockdown in all of Victoria. And it showed very, very clearly how of an impact it has. It saw a 4 and a bit% decline in Victoria alone, and they worked that out to be roughly almost going on to about sort of $3 to $4 billion of lost trade in that period. So that shows you very clearly that retail sales are the barometer around the issues around state lockdowns and why they are so important to stay open going forward. It's nice to see what happened in Queensland today, that the chief health officer up there says it's no longer needed, but it's a very stark reminder that although we're doing very well, lockdowns are clearly an operation that can still happen, and the detriment is very, very clear as well.
The big watch for a lot of people is JobKeeper, what that will do to employment. You're not convinced that's the only thing we should be focused on?
No, I'm not. I think the figures that came out over the last 24 hours around the drop in population needs to be put into that as well. And the reason for that is part of the reason why we had until last year 28 consecutive years of growth is that if you actually look at that, it was because of net migration. We have had a huge import of population, which has been driving growth for such a long period of time. The argument's always been that that growth, because of population, has actually papered over the cracks around structural problems in our economy, particularly employment and therefore wages. There is a lot of slack in our economy, and jobs have been filled by migration particularly, and that lower skilled area has been filled by that. You're already hearing this week the government sort of looks and wants to get that migration back up to keep that growth happening. So that is what I'm looking at, is that if we think of last year as the Great Reset, one of the big things that could be put out there is making the economy more structurally strong domestically, and therefore removing that requirement. So JobKeeper will come out. There will be a movement to the downside because it's still roughly around about 125,000 numbers in the data yesterday were 0 working hours, which we believe therefore are on JobKeeper still. They will filter out. It's more around how we actually get wages to grow, and that means taking the slack out of the market and looking at how net migration works. Maybe we do need to have policy that actually directs at looking to hire domestically before we go internationally.
And so, yeah, what you're talking about is this idea, if we looked at growth per capita in this time and apply it before we had finally a technical recession, we would have had 4 or 5 of them, but because of the focus, including by the media, on just this headline figure, it just disappears out of the conversation.
Yeah, and I think that's exactly what we need to have that conversation now. It's exactly that. So per capita, which strips out population growth, showed very clearly, as you said, Tom, it's actually 5 technical recessions in the per capita basis since the recession we had to have back in the early 90s, according to Paul Keating. That was down to the fact that without population growth, we were very, very anemic. And we knew that. What we also are now hearing from the RBA, and I'm actually calling it their PR offensive around why they're keeping rates at 2020 levels till 2024, is because they don't believe wages are growing or will grow for the next 4 years to make inflation sustainable. So part of getting wages to grow is to actually pull the slack out of the market. The amount of hours lost, according to the latest data, is about 40 million hours of working hour capital is missing, because there are so many people out there that have a job but want to work more. And that all comes into this. This is what we call underemployment. And then underutilization is taking those together with the unemployment rate. Still very high. It's in double digits. It's about 13%. So you need to get that down to about 7, maybe even as, we could possibly get away with 8. Until that happens, there's no real wage growth. Therefore, there's no sustainable inflation. And that's why we are in this loop again, if we do go back to what we were pre-COVID.